Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. I have been warning about this crash for over a month now. Go watch and verify it yourself about these videos on this channel. It turns out I was right to warn everybody, but people are calling me crazy. These retail investors are so overly confident that Nvidia stock can never go down that they say I don't know what I'm talking about. Well, we have breaking news. The world's greatest investor just told us that he sold half of his Apple shares in the last 3 months.
But we have sold shares.
He sold when I was selling my Nvidia shares. How's that for crazy? Warren Buffett is now warning you with his massive freshly printed $277 billion pile of cash. You can stack it to the moon. We have to discuss what this means for the tech sector or this Gen AI bubble. Is the bubble finally popping? What is the true reality of the semiconductor industry? Is this all a facade by Nvidia's genius? What's the real opportunities in this recession flash crash? We have a lot of stocks crashing on Thursday. Then we have more stocks crashing on Friday. Look at Intel stock, which crashed 26%. Intel now is a $91 billion company that employed more than 4 times as many people as $2.6 trillion Nvidia. Of course, they had to lay people off, as it is unprofitable as ever. Look at Snap stock. It crashed 27%. Still can't figure out how to make profit. Jeremy Shopify stock, Buffett Snowflake stock. But it's not just unprofitable companies got dumped. Even the profitable ones, like my Lulu stock, now down over 53% year to date. ARM stock, ARM is highly profitable chip designer. Like they say in their presentation, they charge licensing fees and royalty, but look at their stock. ARM stock crashed 15% on their earnings day, then crashed another 7% on Friday. All these crashes in stocks are because of the weak economic numbers last Thursday. We had an unemployment claim, 249,000 reported, higher than expected. ISM manufacturing, PMI, is weaker than expected, meaning more and more people are out of a paycheck. People used to work in manufacturing, making a decent wage, are now out of income. In fact, an increasingly number of people are unemployed. As on Friday, we have non-farm unemployment change. We got a weaker than expected number. 176,000 was expected. We only got 114,000, and last month's number was revised down from 206,000 to 179,000 as well, meaning less and less people are having a job, and less people every month can hold on to the job right now. More and more people are getting cut as unemployment rate has gone from 4% in June to 4.3% in August. Even when people living paycheck to paycheck are struggling to buy food and live a normal life.
What the hell? $109, and I also didn't purchase any meat.
I almost exploded in Walmart. When I saw the price of eggs, I got so mad.
Make it make sense. I can't afford to live anymore.
Feels illegal.
This should not cost this much.
How are people affording life right now?
Bag of shit packed shredded cheese, man. $7.47.
We have a serious problem in America.
This shrinkflation stuff is getting out of control, okay? If there's one thing in this world that I know, it's what a goddamn Big Mac looks like.
I don't know, man. I just don't know what to do anymore. I'm sitting outside work. I don't understand how I make $34 an hour and I can't function. I don't understand why things are so hard right now.
How they're expecting people to be able to afford to live is beyond me right now. Barely fucking surviving.
When their paycheck gets taken away, how are they going to live? Well, I guess that's why Warren Buffett sold half of his Apple stake. Warren Buffett's Berkshire Hathaway has BRK stock just reported. It currently owns $84.2 billion worth of Apple stock as of the end of Q2, down from $135.4 billion worth as of the end of Q1. Apple stock was up 22.82% during the quarter. So if Buffett had not sold Apple during Q2, his position would have been worth $166.3 billion. Looks like Buffett has sold half of his Apple position. He also sold a lot of his second largest position, Bank of America stock too. Hard to blame him. Apple has been stagnating for years. Cook lacks vision. There have been major product flops like the Vision Pro or the AI car that never ever came to be. Although Buffett has said nice things about Apple this year, his actions make me wonder whether the words were aimed at getting a higher price for his Apple shares. Buffett acquired 800 million shares, split adjusted, of Apple stock in 2016 when the company was worth $600 billion and sold half of his stake at $3 trillion valuation with slowing growth and stretch multiples. This is value investing. I think he sold it at the top, at least its intermediate term top. I think Warren has just popped this Gen AI bubble. Some people are saying Buffett doesn't understand technology. Selling Apple before the AI revolution is an error for long-term investors. Well, I have this for the Gen AI superfans. Nvidia Corporation had an incredible day on the back of my AMD stock earnings. It almost feels like AMD sacrificed herself for Nvidia to take all the glory. AMD stock started the day up 10% like Nvidia, close to trading day only up 3% left, while Nvidia closed the day up 12% as investors celebrated continued demand for GPUs. This exposed how many people are on this momentum trade. It's too much of a crowded trade. Despite that, indications are that the company only has a few key customers and they're admitting that they're overspending on GPUs. Nvidia customer warning. Nvidia's customers are indicating that they both might be done purchasing additional GPUs and that Nvidia's GPUs are expensive versus the competition. Meta and Google represent two of the Nvidia's largest customers and have made statements such as, from Meta, I think there's a meaningful chance that a lot of the companies are overbuilding now and that you look back and you're like, oh, we maybe all spent some number of billions of dollars more than we had to.
Sequoia calls AI the $600 billion question. There's all this investment in chips and the infrastructure and the data centers, but when does it start paying off? Like, is it a bubble? And if not, like, when do you start seeing the money?
I think bubbles are interesting because a lot of the bubbles ended up being things that were very valuable over time, and it's just more of a question of timing, like you're asking, right? Even the dot-com bubble, it's like there's all this fiber laid, and it ended up being super valuable, but it just wasn't as valuable as quickly as people thought. So, is that going to happen here? I don't know. I mean, it's hard to predict what's going to happen in the next few years. I think AI is going to be very fundamental. I think that there's a meaningful chance that a lot of the companies are overbuilding now, and that you look back and you're like, oh, we maybe all spent some number of billions of dollars more than we had to.
From Google, on Alphabet's earnings call on Wednesday, CEO Sundar Pichai said his company may well be spending too much money on AI infrastructure, which largely consists of NVIDIA's graphics processing units, GPUs, but he sees little choice. When we go through a curve like this, the risk of underinvesting is dramatically greater than the risk of overinvesting for us here, Pichai said. These customers are indicating that the number of GPUs that they're purchasing is more than they need.
Do we have snacks?
Wow. Take a load off.
Other companies are indicating that the price of utilizing NVIDIA GPUs is too high. Given that NVIDIA's demand is concentrated in a few customers, demand drops from any one of these customers who don't see sufficient returns on their artificial intelligence investments could be limited. NVIDIA needs to see revenues grow to a multiple of its current size. So not only do customers need to remain already hefty spending, they have to grow that spending for the long run. Whether that happens is a risk that remains to be seen. Some customers might be having second thoughts. AMD earnings indication and competition, part of NVIDIA's returns recently is based on AMD's earnings, which shows continued demand for GPUs. However, to us, there's also a concern about increased competition. AMD reported strong revenues.
AMD reporting a strong, no, super strong quarter. Data center, Dave, that's important, okay? That's the AI there.
Up 7% quarter after quarter. The company's benefited from $2.8 billion in quarterly data center revenue, which more than doubled year over year, and showed that customers are interested in the company's MI300X Instinct GPUs. Operating income for the segment more than quadrupled year over year and sits at around 25% margin. The risk here is that AMD is willing to accept much lower margins than Nvidia, and other competitors are likely the same. That means even if GPU demand remains high for the long term, margins and therefore the profits that Nvidia needs to justify its valuation could decline substantially. The largest risk to my thesis is what has driven Nvidia's valuation: fear of missing out, the FOMO. The company is surrounded by massive companies such as Google, Amazon, Meta, which has tens of billions, if not hundreds of billions, to spend on something if they'll think it'll threaten their core business model. That could drive substantial continued revenue for Nvidia. The other is a chance of major artificial intelligence breakthrough that justifies these companies and their continued investments. That could result in more substantial long-term demand for Nvidia and its GPUs, but that could take a decade. If you are still here, thank you. Here is a clip Jeremy talks about economy just can never be killed because of home builders stock is at all-time high.
And it helps keep things going very, very strong, right? So in order to really truly kill the economy, you have to kill home building. You look at these stocks, they're all at all-time highs. Century Communities, all-time high. Toll Brothers, all-time high. We look at KB Homes, all-time high. Incredible. Look at Lennar, all-time high. If you kill home building, you can kill the economy and you can kill jobs, because this industry is so unbelievably massive, right? And then there's the landscape, the front yard, the backyard. The amount of people that make money off of one home being built is insane, absolutely insane. But if you kill home building, you kill the economy and you kill jobs. So what's going on in home building? Well, home building, believe it or not, is strengthening. How are you going to kill the economy if there's a bunch more homes that are being built and then people got to do their front yards and their backyards and all these sorts of things? Like, that's tough, right? And I looked at those numbers and I said, damn, like, it's not happening right now. Contracted homes were 3,041, up 30%. We can't get a crash in the economy if we have home building this freaking strong.
6 days later, here is Jeremy said, we are already in a recession.
This one's never wrong, and it just flashed, and essentially showing that we are in recession, right? The NASDAQ just lost 2,000 points in a snap of a fingers, 3 weeks, and lost 2,000 points on the NASDAQ. Lululemon stock's now down 53% this year. Claudia Sahm, who accurately forecasted every U.S. recession since the 1970s. Basically, the rule says that if the jobless rate based on a 3-month average is a half percentage point above its lowest point over the previous 12 months, the economy has tipped into a recession. Friday's job report that came out today technically meets Sam's rules criteria. The jobless rate in July rose from 4.1% to 4.3%, ticking the 3-month average more than a half point above the 3.6 average from 1 year ago. Look at this in front of you. This is shocking. It never fails. It never fails. It's incredible. The magic number on the SOM rule is when it goes above 0.5. Once it goes above 0.5, there's really no turning back and you're going into recession. And right now we're at 0.53, so we're actually above where we were in April 2008.
Action speaks louder than words. Buffett sold half of his Apple is telling us that the AI bubble is popping right now, and the stock market crash will bring a recession as we can finally bottom fish on stocks like Lululemon. Here is why I think you can buy Lulu and basically retire after this crash. Is that right, Ted? A lot of fun things? Oh yeah, a lot of fun things. Let's get this party started. Okay.